March 17, 2020, and the market is down again pre-market. And then it bounces, guys. It's some wild, crazy stuff. But trust me, what you want to do right now is focus on buying the dips. I know, anything you turn around and look at, everything is so highly negative right now. But these exact conditions out of which huge bounces in the markets are created. I know you didn't listen to me when I told you that the market was going to crash for 3 months in a row. But now, since I'm sort of the market crash guy, I'm telling you that the crash is over, at least short term, and it is now time to buy calls. So in this video, we're going to show you some really cool stuff that could help you nail some of the best bounces in the market right now. So the worst outcome has actually been priced in. So that's the idea behind the fact that the drop, the crazy drop that we've seen yesterday, like the 3,000 point drop, guys, those wild moves are not going to be repeated. So don't expect the market to drop another 3,000 points. Okay, listen, this is how insane this is. The analysts that were telling you 3 months ago to buy these stocks, okay, because they're going higher to, S&P 3,500, S&P 4,000, S&P 5,000, they were saying, okay, all of those goofballs are now telling you, wait, don't buy. So what has changed in just a month? They were saying, oh, we're going to all-time highs. Now they're saying, oh, don't buy. Not yet. It's too scary out there. Look, guys, you can't follow these people. You got to learn how to make your own decisions. The easiest way to do this is by looking at the charts. So the most important thing that you should know is buy the hell out of JNUG calls. JNUG, basically, you can buy options. You can just buy it. It's real cheap. Guys, pre-market, it's at $7, $8. Hopefully, it's going to open right around there. So you can jump in on this thing because this thing can move to the moon. And I know it's cheap, but it's highly associated with gold. It's actually a gold ETF. So gold has hit some real strong support levels. From here, gold is destined to bounce. So JNUG would be an awesome trade, guys. Even if you have a small account, you buy some options. Like basically, if you got an account, a small account, you can buy Amazon calls. Okay, which Amazon has shown some really strong resilience, and that would be the first stock on our list to buy more calls on today, guys. Amazon is headed back higher, guys. Now, Apple is another story. It's going to be a bit controversial for some time, but overall, you're going to be better off owning Apple calls rather than puts. All the travel stocks, again, they are going to get bailed out. Now, on the contrarian side, RAGN is one of the companies that is involved in basically creating the vaccine for the coronavirus. We don't think that is the company that's actually going to make it happen. So anytime it bounces, it creates a good opportunity to actually short it. Made an announcement earlier pre-market today that it's actually going to start the trials in summer. Like with that type of a delay, it doesn't matter. You don't want to buy the stock right now. And we're actually expecting some institutional investors to start selling it at any moment. So REGN, despite of what it shows, like last time I looked at it, was trading at about 505 pre-market. That's a short. Zoom is likely to, if Zoom, guys, if you see Zoom break, we made some money on the call side. It was finally hitting 119, 120 level yesterday. But it's time to short Zoom, especially if it breaks the level of 102.78. You want to short Zoom. Now, TVIX basically is just it's VIX, but this one has gone really to the moon from levels of 2030 all the way. It's trading at about 600. So you want to short TVIX. Now, unfortunately, this one doesn't have options. But it's going to crash. This TVIX thing is going to crash from 600 all the way to 100 within a couple of weeks. So this is a really, really good trade, especially if you got like a big account. Like that's the one you just want to short it and wait for it to drop all the way from 600 to 100 in a matter of a couple of weeks, guys, and it is going to take place. So this is an awesome trade. Now, for those of you that don't have a huge account, you just want to trade options, just short VIX. Basically, VIX, buy VIX calls. So we think VIX has stopped out officially yesterday on March the 16th. And so today, VIX made a tamper, now the rally at that same level. It was like in the 80s, 83, and from there it's destined to drop. So this signifies the top in the VIX coincides with the bottom in the market. So max panic is priced in. So don't expect more of these 3,000 point drops in the near future. Pretty much every market participant right now is at a level 10, which level 10, guys, I know psychological trading clock is associated with a level to where everybody and their mother-in-law at this point are convinced that the market is going to crash. So exactly when everybody is on that psychological part of the clock, you actually want to buy calls. Guys, you just want to buy freaking calls. In many names that have come down already 60, 70%. You want to go with some strong leaders like Amazon on the call side. The bounce is coming, and I want you to be a part of it. Now, this is how the move is likely to look today. Now, just because I've been screaming in the last few videos, calls, okay? This doesn't mean that the market is not going to drop, okay? Understand this. As we've been screaming for the last few months, short the bounces, this is exactly the opposite. When we're shorting the bounces, okay, we're expecting the stuff to drop, and we want to ultimately nail the top part of the bounce and not the profit. This is exactly the opposite. You want to buy the dip. So the market looks like it's crashing, you want to buy calls. And then it bounces, you want to sell, collect profits. It drops, you want to buy calls. It bounces, you want to collect profits, and you just keep doing that over the course of this week, and you will make a good bit of money, guys. This is a very simple strategy right here. So with that said, expecting at the open, the market we think is going to open right around this number of 24.20. Expect a drop, maybe within 50 points. It's going to look like, oh, right when you're thinking, oh, Leonardo's wrong, the market is going to crash, okay? Right when you're thinking that, catch yourself thinking that and press the button and buy calls, because this is what's likely to happen next. Okay, so expect the markets when they're trying to work their way higher, because the fear is not out of the market, right? Everybody thinks, oh yeah. I mean, when you hear people on TV start saying, hey, we're going to go in the next couple of months all the way to the 2008 levels and below, basically they're saying we're going to go to Dow Jones on the 10,000. I mean, this is some crazy wild stuff. The people are scared to the limit, and this creates a great opportunity on the call side. Guys, if you just simply execute on buying the dips, you're going to do exceptionally well, and that's what I wish for everyone to happen. So with that said, don't panic when the market is going to do this. As a matter of fact, if it does this at the open, it's a really good characteristic, because this is how actually bullish behavior looks. So when the markets drop, you want to buy calls. When it bounces, and it will bounce, okay? I'll show you on a longer time frame chart. I'm going to show you specifically why the market's going to bounce. So we've gone through some substantial Federal Reserve boosts to the markets. The market did not react, but sometimes we have this delay in the reaction, as I pointed in multiple videos. So this delay effect is likely to materialize. So we are heading for a bullish move today, tomorrow. Pretty much, you're going to see this calendar fill up by the end of the week with a lot of green moves. 4, 7, 7, 1, something like that is how this 17th, 18th, 19th, and 20th is going to look. So highly bullish going into the next few days, despite of how negative the headlines are, guys. Because the headlines in the news, they always represent, okay, stuff with a delay effect. They always tell you stuff after it happened. They're still talking about how bad things are. Okay, where the hell were they when things were really bad before they dropped? See, they never tell you, oh, shit is going to drop tomorrow. They tell you, everything is bullish. Our analysts raising target prices. Okay, that's when you got to worry. Okay, now that stuff dropped, they keep talking about all these horrible things, but it's too late to be talking about horrible things. You got to focus on what is the next move. The next move is a bullish move, not a bearish move. So levels from March 17th to March 20th. So how high can we go, Leonardo? How high can we go? So this is a 10-day, 30-minute chart. We can easily revisit this level of 26.91 in the next 3-4 days. We could possibly break out. If this level of 26.91 gets taken out, we're going to possibly see S&P at 28.80. So considering that pre-market, we're at 24.36. That's where we are. I mean, that's a substantial move. That's almost a 400-point move in the S&P that we could see in the next 4 days. Yeah. So yesterday was a move 3. It started out as a move 13, definitely had the characteristics. Ended up being a move 3 with an 11 behavior. So basically, you got a huge gap. Here it is, acts like a V-shape 13, but then basically all the excitement dies out while Trump, especially in the last part of the day, says, hey, if, don't go to the bars. Like, hello, Trump, we were waiting for some fiscal stimulus. You're telling us not to go to the bars? That's not what we had in mind, said the market, and sold off basically to almost hit a second limit, right? We're down 12.93%. Pretty crazy stuff. Okay, but since then, okay, pay very close attention because I'm going to show you this one chart and it's going to show you the levels. It's very important to understand that now we visited these levels 2, 3, 4 times and the bounce is coming, guys. So today's sequence is 7-3. This is how it looks on the chart, 7-3. The market is in shock here. It's really trying to find a sense of direction and it's going to resolve to the upside. 5-day sequence, 7-3, 11, 7-3. Basically, if you extend the sequence, we actually had 3 followed by 7. So this combination recently playing real strongly. So the next move is 7 according to this 5-day sequence. Today, we're destined to get a 7 move, which is a green bullish move. It's going to look something like this to the upside. Now, this is what the 5-day chart clearly points. So we get here once, we get here twice, we get here 3 times, 4 times. We're likely to get here one more time when market opens, and from here we're destined to bounce, guys. So 5 times, bounce. That's how things are going to look. Now, beginning of the downtrend in the VIX. Today, March 17th, guys, officially VIX hits yesterday, 82.95. We think that is the highest for the VIX. From here, it's going to drop. So even though it's been uptrending solidly, we think there is a trend reversal right here, right now in the VIX, and it will finish much lower by the end of the week. We could see VIX back to the 40s, 50s in the next 4 days. Yeah, pretty insane stuff. So with that said, guys, take advantage of this crazy market and make it happen. I'll catch you on the next trade soon.